Good evening everyone, Senthil here. Can everyone able to see my screen and hear my voice clearly? Hi, good evening Mr. Agam Shah. Others, can you able to hear me? Hi Nagraj. Hi Anand. Vinod. Thank you everyone. So let's start today's session. So today we are going to discuss about options, a very important subject. And say like there is a very high possibilities of making good profit in options, and also there is very high possibilities of losing the entire capital in a single trade. So both the ways it's possible. It's like a two-sided sword. We don't have handle. If we don't handle this properly, the possibilities of making losses 10 times more than the possibilities of making profit. So we should be very careful, and we should have many parameters to be checked before entering into an option trade. Just like that, someone has given a tip, we should not make our entry in options. So it will be like a blind trade. Options will be like a blind trade, so we should not do like that. So we should be very clear on option trading. So let's see one by one. So we'll wait for a few more members to join, since if we could not able to they could not able to catch up, they could not able to understand in between. So options can be traded in index and stocks. Options can be traded in index and stocks. And the index, we have a option weekly expiry. Okay, index options we have a weekly expiry, wherein stocks we have only a monthly expiry. So monthly expiry, it will be always better. Weekly expiry, there is high possibility of losing money and also making profit. Yes, both the sides it's there. Yeah, today's stock Phoenix, it was a very great call. It was a very great profits for all the members. That was very good. So many good days we get like this. So let's hope for a good days continuously. So now let's see, ICICI Bank 78% open interest. Let's try to understand. Okay, it went up to 78% open interest. So it's completely day high. It's completely high. So we don't have any trade here, right? So we don't have any trade here. Lupin. So please, let's not review the stocks. So we are here to learn complete new strategies. So let's not get diverted. It's standing on 400 SMA, 450. Sorry, 450 SMA. It's a standing. So from now we can expect a reversal. So below this we can look for a short. Ambuja Cement, but no movement. Ambuja Cement. Let's see. Ambuja Cement. See, first, is it as per trade setup? Varsha ma'am, so you should tell me, is this as per trade setup? No. So why do we want to see the stock? What we have studied yesterday is, whichever the stock is coming as per trade setup, only that will perform. And only we are supposed to pick only that. And someone was asking about some stocks today, I think Wipro or something. Again, that is not in a trade setup. So the second candle today, uh, it was a red candle, right? So if we start seeing the stocks one by one, see here. So but there is no entry for the stock 450 SMA. Still, it is in selling side only. So we don't have an entry here. We don't have an entry here. As I told you, there is few more parameters to correlate the cash market and future. So let's complete the option study. Then we will correlate in between cash, future, and option. Okay. So option, again I'm repeating, it's a very important session. I can see many members are making good profit in options. If you get the complete knowledge, your error rates will go drastically, it will go down. Drastically the error rates will go down. So there is high possibilities of making good profits. Clear? So getting into the slide again, it's like a very normal, very limited 2-3 page slides only, 1 2 3, that's all. So but making you understand this 3 slides, it will be like a very tough task for me. So let's learn very slowly and clearly. Okay. So derivative options. So as in derivatives, this is the second type of instrument. First instrument was future, and second instrument which is going to be option. Okay. So derivative option. So as we have seen in future, in options also, buy and sell can be done only in lot size. If it is State Bank 3000, you can buy one lot 3000, two lot 6000. So this is the denomination can be done. 1024, 2024, nothing can be done. So no irregular denominations, only proper denominations as per the market lot size will work here. Premium is enough to carry forward the position. So in future, what we require, can someone tell the technical term? What we require to carry the position in future? At least few should answer. Margin. Okay, the right term is span margin. The right term is span margin. Rollover is a process of closing one contract and opening the next contract. So that is not the right term, sir. The right term is span margin. Okay, the right term is span margin. Here, instead of span margin, we tell this term as premium. We tell this term as premium. So let's learn where have you heard this premium previously? Where and all have you heard this premium previously, other than stock market? Perfect. LIC. Other than that, what type of insurance? What type of insurance? Health, clear. Health, term, general, perfect. So now let's take health insurance as an example. So that will not hurt anyone. So let's assume that health insurance. So for buying a health insurance for an age of 35, male, for 1 year, mediclaim, that is we tell this as health insurance or mediclaim, the approximate 1 year and a policy premium of the sum assured of 3 lakhs, approximately it will be in between 7.5k. Let's take it approximately. Let's not go high, low. Let's assume, just we'll assume that as 7.5k. Okay. So in case if I met with some medical emergencies, whatever the claim, say like for example, I met with some medical emergencies, a small, we can say like tonsils or appendix, whatever it may be. So say like the cost of the surgery is 1.2 lakhs. So is the premium was helpful at this time? So which amount is greater, number 1 or number 2? Number 1 or number 2, the premium? So number 2. So instead we have paid only 7.5k, but we are getting a benefit of 1.2 lakhs. Say like for example, nothing has happened throughout the year. Nothing has happened throughout the year. So do you consider that this as a loss? No, right? It was a precaution. It was a precaution measure. It was a precaution measure. So it has used me to protect my health. So like that, here it will not be like here when we correlate this into stock market, I'll tell you exactly how it is used. So for example, I want to trade in Reliance one lot of say like 500 quantity or one lot I want to trade in Reliance, the movement, that is again the same situation, buying at 1250, my stop loss is 1230, my target is 1300, and time, the time is 5 days or 3 days something. Okay, and I for buying in cash market the 500 shares I need 6.5 lakh. I don't have that. For trading in future market I require 2 lakhs. I don't have this also, but still I want to trade the renting of movement. Still I want to take the benefit of movement. So what we can use this what we can use is option, that is called as premium. So cash trade is real money. Okay, cash trade is real trade, actual money. Future trade is renting the movement. What we require is span margin. And option is again renting the movement. What we require is premium, or called as insurance. We pay a small insurance. Okay, it's like a we can't tell this as a betting or gambling. It's actually not betting or gambling. So that is a wrong technical word. That is a wrong technical word. The right term is premium, or else we can tell this as an insurance. For example, I am betting that I am expecting, say like I am doing an analysis that from 1250 this stock will travel to 1300 in 3 days. Okay, and in case if it is not going down, I will put a stop loss and I will exit. Okay, if I'll put a stop loss and I will exit. See here, I am expecting a target of 50 points with 25,000 rupees profit in. No, this is not 25,000. Okay, leave this. Let me erase these points. So let me create a new example. So I am buying a premium. So still I have not explained what is premium, how it has been calculated. Okay, so I will buy a premium and I'll put a stop loss and exit if it is not as per my prediction. If I don't exit with stop loss, the possibility of losing the complete premium is high. So what happens if I buy a premium for 10,000 rupees and if I don't exit at 25%, the maximum stop loss on premium by default stop loss. So in delivery we tell us default stop loss is how much? 5%, right? Same like that in option, the default stop loss will be 2,500 rupees. Sorry, 25%. It will be 25%. On the premium value, it will be 25%. So if you don't exit by, so for example, if your option value is 10,000 rupees and if you don't exit by 2,500, that is 25% in loss, you lose the complete premium. The possibility of losing the complete premium is very, very high. So I'll show you how the option has been calculated. I'll show you now. And very important thing, averaging in option is a crime. Averaging in option is a crime. It is like committing suicide. It's a very bad negative word, but still I want to make you very clear. I want to make you understand very clear. That's the reason I'm using this term. It's like committing suicide, because the option which depreciated, say like for example, option from 10 rupees which is gone to 2 rupees has never came to 10 rupees again. The accuracy is 99.9%. It has never came. If the option from 10 rupees, if it has gone to 2 rupees, 99.9% it has never came back to 10 rupees. Who didn't understand this point? A stock you bought for 100, it went to 50 rupees, it may come back to 200 rupees in 2 or 3 years time. But in option, you bought for 10 rupees, it went for 2 rupees, again coming back to the 10 rupees, the possibility is only 0.01 percentage. Are we clear? So that is the reason averaging in option is a crime. We should not do that. Even in stocks, it is not advisable, but on a long-term investment, that's fine. But averaging in option is completely not advisable. So now, how this premium is calculated? What is premium? How this premium is calculated? So let's take some real examples. Let's take some real examples and let's do some research. Okay, now if we see Reliance, okay, your suggestion is right and very important. Yes, sir. Sir, it's not that you have lost thousands in averaging. Many members have lost lakhs and lakhs of rupees in averaging, sir. That is absolutely wrong thing. You put stop loss, you exit, or else you just leave that, close the trade, close your eyes, let it become zero, even that is fine. So now let me tell you how the premium is calculated. Okay, how the premium is calculated. So now we are in 26th of November. Okay, 26th of November. So when is expiry? When is expiry? This month contract, when is expiry? Date. Today we are in Tuesday, right? So 28th is the expiry. 28th is the expiry. So how many days, how many trading days is left? How many trading days is left? 2 days left, right? So now it should be an interactive session. So please be alert, please be active. So even if you feel little lazy, you cannot able to understand complete strategies. Okay. So now we have only 2 days left. So the current market price of Reliance is 1560. The current market price of Reliance is 1560. So now from 1560, how far it is possible reaching 1550, or say let's say like 1540? How far it is possible? Let's ignore this. How far it is possible? 70% it is possible, right? 70% there is possible. If tomorrow market is crashing 20 points, just 1.5%, it may reach very easily down. So how far it is possible reaching 1600? So now we can see stock is in top of the curve and we have only 2 days for expiry. Can we say like 40%? 40% there is a possibility to reach 1600, right? 30% or 40%. Let's take on a higher chance itself. Here it is 70%, there is possibility. How far it is possible to reach 1500? How far it is possible to reach 1500? 20%? No, ma'am. I don't think 20% is also okay. Let's take as 20%. Let's take up as 20%. So this is almost arriving the targets. So first, while trading in options, you should know from this current market price, you should know where the stock is going to reach, in how many days. So what is important? Direction, number one. Number two, time frame. Direction and time frame is very, very important. You may say that this stock will come to 1450 in 10 to 15 days. No, this is not going to work in option. You can short in future and you can hold for 10 to 15 days peacefully by putting a stop loss here. But in option, it has to travel within 3 or 4 days. If you are sure about the time frame only, you can trade in options. So why I explained you about the target and time frame? Because based on the target and time frame only, the premium is calculated. So how this premium is calculated? Let's see. So first I'll just explain you the 1500, okay, and 1600 and 115. Okay, I'm taking input. $1540. Okay, if you can able to see here, the stock reaching from top to, so you can see here 1540. Call put we will discuss later. Just after 5 minutes we will discuss. Okay, you can see here this is 1 point and this is 1 point. Okay, this is 1500, 1540. If you see the premium here, 3.6 and 1.2. So why this premium is cheap? Because The possibilities of coming here is very less, so the premium is cheap. The possibility of coming here is fairly possible, so it is 3 rupees 60 paisa. Why it is only 3 rupees 60 paisa? Why not 10 rupees? Because the time left out for the trading is only 2 days. The time left out for the trading is only 2 days. The same thing, the same strike price 1540. If you take in next contract, same like that, we have 3 months contract. See here, 3 rupees and 30 rupees. It is 10 times premium is high than the current month. Why? Because of the time frame. The time frame is very less. So now how this premium is calculated? How this premium is calculated? The current market price. This is the current market price of the premium. Okay, so 3.6 into 500. So approximately 1800 approximately. So this is the premium. If you have 1800 rupees, you can better trade on 1540 put. That is, market will coming down. Market will come down. So do you have any, forget about call option and put option, forget about this. Do you have any doubt on how this premium is calculated? Premium, we don't have anything to do. By default, what is the running price, we have to buy. That's all. Any doubt till here? Just understanding what is premium and how to pick the premium. Now if I go and buy 1500 put, do you think this is going to give me profit? Yes or no? If you simply, will someone go and buy knowingly that this is going to give loss? We know that 99.9% we know that this is going to become zero. So do you have any possibilities to go and buy this? Do you have any chances to go and buy this? No, right? So we should not trade on this option. So I think there is no questions on understanding the premium. So I'm happy that everyone is familiar. So next, now premium or insurance is used to rent the movement with small insurance. Is used to rent the movement with the small insurance. If the movement is favor for me, I get profit. Repeating, if the movement is favor for me, I get profit. If the movement is against me, put stop loss and exit. Stop loss and exit. So these examples we have seen. Why premium gets decay every passing day, sir? Ma'am, that is what I told. When the contract is coming near, the premium will get eroded. The premium will get eroded. Okay, so the premium decay we will see later. So it is very early to learn about premium decay now. We will see later. So that is today itself we will see. So let me see whatever I have left something or not. Bharat, calculation, there is no calculation for premium. You have to simply see this and buy sell. That's all. You can decide only whether I can buy at 3 rupees or 30 rupees. You can only decide. You can't uh, decide the premium. This time the premium should be only this much. No, we can't decide. Number one, you can't even predict what will be the premium. You cannot able to predict exactly. That will change on month to month, time to time it will change. So let me see what is left out. If we trade in bottom, everything, sir, don't bring the trade setup as of now. Okay, don't bring the trade setup as of now. So let me explain you first. After that, let's correlate with the trade setups. So now normal process. So now whatever we are going to learn is normal process of trading in options. Say like everyone might have known 2000, 3000 rupees premium we pay to the market and we see whether we have a luck or not. So that is not the right way to trade. A premium should be in between 10 to, say we can say like 8 to 12,000 rupees. Single lot premium, single lot stock option premium should be in between 8 to 12,000 rupees. You should never buy a stock option more than 12,000 rupees very strictly. 12,000, 12,500 is fine, but even that is on a higher price. you should not invest a stock option more than 8 to 12,000 rupees in market. And same time, you should not buy an option even for 1,000, 2,000 rupees. That is also useless. Next, for trading in Nifty or Bank Nifty option, it should be in between 2 to 5,000 rupees. It should not be more than this. Okay, so your option premium value should not cross this levels. So that is very, very important. Next, now we are going to learn about we have an advanced study on options, but we are not going to learn that today. We are going to learn the basic trading on options is on call and put. So call option. So the term call option means stop. The term call option means CE in the sense call option. Voice is not clear. Mic is very near, ma'am. The term CE means option. CE option means it's a call option. Stock has to come up. The market has to move upside. Market has to move upside. If you are buying a call option and market is moving sideways, you will make loss. If the market is moving downside, again you will make loss. So when you buy a call option, the only way you make profit is the stock has to move on a upper direction. The stock has to move upside. Even if the stock is not moving upside, if it is staying on the same place also, we make loss. So as I told you, both the options we will buy. In short selling, what we do? In short selling, we sell the stock first and then we will buy. No, here the action for call option is also buying. The put option is also buying. You can see here put option in the sense put. When we put something, what happened? When we put something, what happened? The product or whatever the thing we are having in hand, it will just go down due to gravity, right? So put option means market has to go down. Market has to go down. Market has to go down. Again, we will buy only put option. We will not sell put option. We will buy only put option. For example, Nifty 11,000 call, buy at 88, stop loss 66, target 110. If this is for uptrend, if Nifty you are expecting downtrend, Nifty 10,900 put, buy at 64, stop loss buy at 85, stop loss is 64, target is 110. So this is the explanation. Any doubts still here? Any doubts still here? How do we decide target? Sir, decide target, we have seen right, as per the technicals, we know right at approximately which place it will reach. Okay, so now I'll explain again. Call option in the sense buying an option, buying an option that market has to go upside. Okay, market has to go upside. Market has to move upside, and that is action is buying only. Put option in the sense we are expecting downtrend in market. Call option in the sense we are expecting uptrend in market. Market, stock, both are same. And we are expecting go down. Put option in the sense we are expecting stock to go down, market has to go down, and both that also we will buy. Say for example, I am expecting Reliance. Now current market price is 1500. I am buying 1520 call at 10 rupees. If Reliance moves from 1500 to 1520, this 10 rupees will become 15 rupees. Clear? Any doubt till here? Any doubt till here? It's not muted, it's very clear. What could be the normal risk and reward in options? Sir, as I told you, it will be 1:1 initially. Okay. So that is the calculation, sir. That is the calculation. That is called as. So Aditya is asking how this will move from 10 to 15. This is called as weighted average movement. So that I'll explain you how that is getting calculated. Okay. I'll explain you how that is getting calculated. So any doubts till here? Reliance, when it was 1500, I am buying 1520 call and I am buying at 10 rupees. When Reliance moves to 1520, this 10 rupees will become 15 rupees. Clear? Second one is Reliance at 1500, I am buying, I am expecting a downtrend. Reliance 1480 put. So as per current learning, should I buy this or go for a short selling in this at 10 rupees? Should I buy here? I'm expecting a downtrend from 1500 to 1480. 20 points I'm expecting a downtrend. So what I have to do now? Should I buy this 1480 put or should I sell 1480 put? Buy. We have to buy because that's what I told you. Action here you can see here both is buying. Both is buying. Okay, we should buy. So when this comes 20 points down, this 10 rupees will become 15 rupees. I am just how to say that I'm just uh, entering in a trade which side the market will move. So I am buying a option. So if market moves upside, you have to buy call option. If market you are expecting downside, you have to buy put option. Any doubts still here? Maybe someone is having doubts, you can go through one more time the session. You can go through the session one more time because someone for newly, if you are seeing into option, it will be little bit confusing mode, but you can learn very easily, not a very difficult task at all. If a stock is at 1500, we buy 1500 call and the stock shoot up 20 points. Also, why the call will increase by 10 points only? Yes, that's right, sir. Because you are buying a premium, right? You are not buying the stock, you are buying the shadow. Okay, let me explain you. This is cash market movement. Okay, cash market movement, and this is future market movement. Again, this is like a shadow only. This is again future market movement. Approximately it will move along with the cash, but option, it is like when it is at 1500 and when it reaches 1540, 40 points movement is there in the stock, and when you buy 1500 call, 1500 call, it will move 20 points, and if you buy 1520 call, it will move 15 points. When you buy 1540 call, it will move 10 points. Sorry, this will not be this much, it will be only this much. You can erase this much. It will be only 10 points. So why is it so? Just now before starting the session, I told you from here reaching to here, how much is the possibility? From 1500 to 1500, how much is the possibility? It's live, right? It's live. So the premium will be costly. And when it goes inside, it will be very, very powerful. And from 1500, 1520, it is fairly possible. 1540, it is possible. So as per the shadow, it will start moving. So any doubts still here? Understanding call option and put option. is there any discount? Is there any stock at discount in option also? No, sir, no. So next, I'll move to the next topic. So option depreciation, I'll explain you. So there is called as ITM, ATM, out of the money. ITM, ATM, OTM. So it's a very little bit again a complicated task to understand. So let's do it very clearly now. So now let's take that 1432 is the current market price. For example, 1432 is the current market price. Okay, you can see here this side is call option, this side is put option. Okay, before that let's understand one more logic. Okay, 1500. So now 1500, how far is this true? Tell me true or false. When the current market price is 1500, current market price is 1500, and when we select the option 1500 call, is this true or false? Yes, right? True. That means now the current market price, you can see here, current market price is 1560. If I pick 1560 put and 1560 call, okay, 1560 put and 1560 call. Why it is like this? Okay, so if you see this 1560 call and 1560 put, you can see here current market price and 1560 call and 1560 call and 1560 put. Simon, if you buy 5200 call and the stock move to 5240, the premium will be above 40 only. No, Simon, I'll explain you. Just hold your patience. See, now, is this both are real? Is this both are real? Call and put both are real? Yes or no? Now, the current market price is 1560 and the Reliance 1560 put is 8 rupees 70 paisa, but 1560 call is 14 rupee 90 paisa. I don't know why this much premium difference is there. So let's see Reliance future. Reliance future is in the normal price only, 5-point spread, but this is something abnormal. This is something abnormal due to today's market gap up. It was due to something abnormal. Usually what happens, it will be more or less in the same premium value only. The current market price, and when we take the both the sides strike price, it will be usually on the same current market price only. This is something unusual. Okay, so now what we came to tell, okay, so from the current market price 1560 and 1560 put and call, so this is called as, it is called as at the money. Can we tell that at the money? Assume that someone is asking you to wait at pillar number 24, say like on the parking lot. Okay, you are standing in front of the pillar number 24. What you will tell? We will tell like I am just in front of the pillar, I am at the pillar only. So same like that, when we tell, when the current market price is near to the strike price, that is called as at the money. Any clear in understanding at the money? This is now clear. Any difficulties in understanding at the money now? Simon, I'll come. Simon, please wait. Both call and put called as ATM. Yes, both call and put. When you buy 1500 call, that is called as ATM, And if you buy 1500 put, that is also called as ATM. So let's take very clearly 1560. Okay, 1560 put is called as ATM, 1560 call is also called as ATM. Any doubt in this? Can we go to the next thing? Yes. Current market price is at the money. Yes, on current market price is at the money. Say like for example, now the current market price is 1570. So now, will this be at the money? Call. Will this call be at the money? No. This will become first strike. This will become first strike. Okay, let's see that later. Let's see that later. Let's go by the same thing itself. Means put or call current market price is ATM. So put or call current market price. Yes, correct. If the current market price of the stock and the strike price, if it is matching, that is called as ATM. Okay, next. So now let's take 1540 call. 1540 call. So now this has to reach, while coming from down to reach 1560. The current market price is 1560. So this 1540 is inside this or outside this? While going up, call we are expecting going up. Inside, others inside. So that is the reason it is called as in the money. It is true fact. It is true factor. Current market price is 1560. If you are looking for 1540 call, that is already happened. It is not virtual, right? It is not projection. And the current market, can someone tell that the current market price is 100? Can someone tell the stock will go up to 90 rupees? Is this right or wrong? So you will tell immediately, sir, already the stock is 90 rupees, already the stock is 100 rupees, sir. What you are telling, go and check the price. Am I right? The current market price of the stock is 100 rupees. And if by seeing that, if someone is coming and telling the stock will go up to 90, that means either he is predicting downtrend, or if he is predicting uptrend on 90, that is wrong. So this is called as in the money. Okay. So now 1540, 1580 call. So now what do we tell this? You can see here, out of the money. That means projection. Current market price is 1560. I am projecting from 1560 it will reach till 1580. This is called as first strike or out of the money. So from 1560 reaching to 1580, is it fairly possible? If the market again turns bullish like this, is this fairly possible? Yes or no? Yes. So next is 1600. Next is 1600. Okay, next scenario is 1600. So now how far it is possible? Again, it is little fair possible, because we have to consider how far is the days for expiry. How far is the days for expiry? We have only 2 days for expiry. And 1620, 1640. So now can we tell us this is possible, this is slightly possible, this is not possible, and this is not possible? I mean, have I marked it right? Have I marked it right? Yes. So if you are going to trade this month contract for next 2 days, you can trade first strike or second strike. But buying 1640 call this time, it will be absolutely nonsense. So we should not do unless we have a strong news or strong prediction that the stock is going to give a big rally. If you like these kind of fourth strike only, you will get big profit. But you should know whether it is going to give profit or not. So now let's check this only on the call side. Let's check. Bear is equal to ATM, bull is equal to OTM. Both sides should be buy. No, sir, we will buy only one side, sir. Don't get confused. Now we are learning about naked options. That means we will buy only one side. What if we write far out from the money option? What if we write far out from the money option? That is option writing. We have that as a next topic, sir. Now we don't have anything to do. When 1567 can we take instead of 1560? 1567 can we take instead of 1560? Yes, you can do. That will be in the money. So let's understand which stock has performed how. All are junk stocks. Okay, let's take Dr. Reddy. So if you see, Dr. Reddy has given 2% profit. So let's understand that clearly from where it has moved till where. If you see this stock from 2930, it has moved till from 29330 approximately, it has moved till 2972. Not a big move, not a big move. It has moved 30, it has moved 40 points upside. It has moved approximately 40 points upside. In this place, can we buy 2950 call? Assume that this is the place you are going to make an entry today. So if I buy 2950 call, is that right? Predicting a uptrend. Yes, you can see here 2950 call from 20 rupees, it has gone to 42 rupees. It has gone to 42 rupees. Same thing, if I buy 3000 call, is that right? If I buy 3000 call, is that right? Yes, we can take a small chance. We can take a small chance. Still see here from 9 rupees, it has moved to 17 rupees and closed at 14 rupees. So from 2930, we can take first strike and second strike and we can try. But if you take 3050 call, this is absolutely waste of time in trading. You can see here, still it has gone up, but we don't know whether it will give profit. You can see here, there is no liquidity in this particular strike price. There is no liquidity. So the probability of making flat profit or loss is high. Clear? So choosing the strike price is very, very important. So next, so we have seen what is call option. Now let's enter into the put option side. So from now, that is from 1560, I am expecting stock to reach 1540. Now can we tell this as, is this real or projection? 1560 is current market price, and I am expecting this to come and reach till 1540 projection, right? So this is called as first strike, and again this comes under out of money. From here again I am projecting 1520. Is this real or projection? From 1560, again this is projection, right? So again this is projections. This is called a second strike out of money. So this is our projection. Generally what we do is we trade in at the money or first strike or second strike maximum. Mostly we will not trade in the money because the premium will be very, very high. Why we could not able to trade in the money? So when current market price is 1560, if I go and buy 1540 call, so it will be, first it will be very costly. Number two, liquidity will be very less. Number three, there is no need to buy 1540 call because that is already happened. Am I right or not? When market is at 1560, if you go and buy 1540 call, that is already happened. You don't need to go and bet there. You should either check. Why should we? Sir, I am telling we should not buy 1540 call. That is not required. Clear? So this is the direction is very important. The time is very important. Choosing the stock is very, very important. So this in detail we will see. So I'll take half a minute break. So by the time if you have any doubts, you can post here. I'll just take half a minute break. Thank you. But the change in premium in the money option moves very quickly. Yes, that is right. But is it okay if you buy a premium for 40,000 rupees? Is it okay? Assume that, assume that you are expecting Reliance to move down from 1560 to 1500 in next 5 days. Okay, 5 days. Okay, let's not even take 5 days, 3 days. Tomorrow morning you are planning to buy 1560 to 1540. Let me make a note here. 1560 to 1500. Time frame is 3 days. So will you buy now? Will you buy now this month contract or next month contract? First question. Answers please. 3 days is the time frame you are expecting to reach this 60 points downside. So obviously we will be buying next month contract. Okay. So now let's go and see next month contract. So now will you buy? Okay, you are telling why should not we buy 15 in the money. So assume that I am buying 1580 put. Sorry. How much is this? 48 rupees. 48 rupees into 500. So what is the premium amount? So do you think is it worth to invest 24,000 in option? That too in a single lot. So now fine, if you are ready to take good reward and good risk, but if you take as per my stop loss strategy by 100 into 25, your stop loss is going to be 6,000 rupees. In single lot trade, are you ready to take 6,000 rupees stop loss? So this is where we should be very, very careful. So instead, what you can do is you are expecting to reach 1500, right? So you can take 1500 put. So what is your premium? 18.6 into 500. Your investment is only 9,300 rupees by 100 into 25. Your stop loss is only 3 approximately 2,400 rupees. Is this digestible stop loss? I am telling again about the maximum stop loss. Is this digestible stop loss? Okay, we invested 10k. So if you are getting profit, we will get 15k. If you are losing 2400, that's fine. So this is how we have to calculate the premiums. We should not buy premiums in a bigger way. See, that is the reason we have came up with the money management. In this instrument, we should invest only this much. Are we clear? In this particular instrument, the maximum investment should be only this much. If we invest more than that, either you can face big profits and you can face big losses, and the other side, in naked options, the possibility of making profit is only 30%. 30%, even if your accuracy is 70%. Who don't understand this? What, sir, what you are telling? I didn't understand. My accuracy, my trading accuracy is 90%. Okay, my trading accuracy is 90%. Nobody will have. We'll take 80%. Okay, let's assume that my trading accuracy is 80%. In future, you will have 80% probability to make profit. But the same trade, if you do in option, you will have only 30% to make profit. Can someone tell why? There are two factors. Yes, there is time decay is one factor. Number two, momentum. Momentum is very important. We learned yesterday something like momentum, right? The force. Say, like, for example, premium eating with time frame. Yeah, that is called as time decay. So assume that option is like a, no, Prashant, it's, we should not tell like that. It's not like our lottery ticket and all. Say, like, if you predict, if you plan properly, it's all about calculations. So let me explain you. Say, for example, 2nd, 10th, 15th, 20th, 25th. Okay, you buy something at, you are buying a stock at 300 rupees. You are buying some stock at 300 rupees, and after 10 days, after you are buying at 2nd of December, 300 rupees. So let me just explain you. Okay, let me just explain you. Let's take this factor alone. Okay, you are buying some stock at 300 rupees on 2nd. It is going to 310, again coming back to 300. So do you have any profit here or loss? Answers quickly, because I have to draw 5 times. No profit, no loss. Again it is going to 290, again coming back to the absolute number 300 by 15th after 5 days later. Any profit, any loss? Assume that you didn't see this. So there is no transaction loss, sir. You bought and you are holding. Again it is coming here. Any profit, any loss? No. Again coming here. Any profit, any loss? No, right? So this is called as absolute numbers. Absolute numbers in the sense, you bought either in cash or in future at 300. After certain movement, after certain days, if it is coming back to the same price, there is no loss. But the same place, if you are buying an option at 10 rupees, okay, it will go here. Assume that it will go here at 14 rupees. It will not go 14 rupees. Maybe if you buy at 10, it will go only 13 rupees. Again coming back here at 8 rupees, going here at 6 rupees, again coming back here at 7 rupees, here at 9 rupees, again coming back here at 6 rupees, 5 rupees, it will close here at 3 rupees. Now do we have loss? But future or cash market, there is no loss, sir. Why? Because 28th we have expiry. So this is called as time decay. the time near to the expiry, the premium will keep on depreciating will come. The premium depreciation will keep on happening. Future lots are heavy. Sir, if you manage proper money management, managing future is not a big deal, sir. If you have a proper money management, proper capital, managing future is not a big deal. We should not gamble with future. That is one is very, very important. Okay, so this is time decay. Clear? So next, but if stock up from 300 to 310, Aditya, that is what I told. Even if the stock, that is what I told, from 300 to 310, again 300, 290, 300, 310, 300, 290. For this jumbling, option will depreciate. Stock is trading on range bound, maybe little trending also, but on a overall basis, option is depreciating. Option is depreciating. Can we trade in intraday using 15-minute chart? Bhaskar, we have not taken through 15 minutes, so you have to wait for that particular session. Okay, so let me, even though stock is up, time decay premium will not increase. That's right, sir. Or the stock should move with the momentum. Momentum means, as I told you yesterday chart we saw, right? Complete upswing, complete upswing. If you want, I'll show you. Yesterday's chart and today's chart, Nifty. So just opening the future chart just for an example purpose and not for actual thing. You can see here, Nifty today opened at what price? 12,119 and closed at just 20 points below it has closed. Just 20 points below it has closed. So now, what is today? Tuesday only, right? We have 2 more days for expiry. So now, let's see 12,000. So when market is at 12,100, we have to see 12,000. Let's take in the money itself. It will be more powerful. 12,100 call. See here, sir. It is in the money. 12,100. Market is, we have taken 12,100 call. By opening, it was more than 12,100. Again, closed more than 12,100. You can see here 69.49. Because it came down, it went up, again came down drastically, and it will not appreciate it. It didn't appreciate it. So this is because of time decay. Every second is matters in option. Very risky to hold option buy side more than 2 to 3 days, specifically second half of the month. I'll explain. There is a time frame to hold option. So now are we clear with in the money and out of the money? Out of the money in the sense projection, in the money in the sense real, for both call and put. Okay, so let me go to the how one decides that option has topped up. I didn't get you, sir. Suppose we have taken a call option of reaches maximum. No, sir, we cannot able to understand it. So it has reached its maximum. We have to compare the stock, and then after that we have to decide that option. Suppose we have to take suppose we have taken call option strike price 103 and the stock reached 102 and the premium reached 4, but on expiry no buyers is there. We could not square off. Will it be a loss? Yes, sir, it will be a loss. If there is no buyer, then it will be a loss. Put ITM is for OTM call. No, sir, I didn't understand. This side is different. This side is different. Why you are getting confused? If you are expecting a uptrend, you should buy this side options. If you are expecting a downtrend, you have to buy this side options. What is the confusion here? Right or not? If you are expecting a downtrend, you should buy 1540 put, 1520 put, 15 option chain data tomorrow, madam. That is a complete, again, a big session. We will see tomorrow. That is part of tomorrow's curriculum. Yeah. So coming back, so let me see what is left out. Okay, now we have learned what is option in the money, out of the money we have learned. So now let's learn how to check whether this stock is fit to trade in option. That is very important. So check spread, check liquidity. So let's understand what is spread. So let me check. In simple words, call up and put down. Yes, absolutely right, sir. Call up and put down. So buy and sell only in lot size. Premium is enough to carry the position. Contract basis, same like future. There is 3-month contract, but never trade in next month or the far month options unless there is a need. And three contracts near, next, and far. CE in the sense call option. PE in the sense put option. Premium is enough to carry the position. Contract basis. Expiry on the last Thursday of the month. 3 contracts, buy and sell first. Option writing we will see later. F&O ban period we have seen already. In the money, out of the money, at the money, check spread, check liquidity. We will check. So how you calculated how much premium will rise? 10 to 20 point movement. Okay, I'll come Sankeet. That there is no derived formula to understand the movement. Okay, you can do that only based on your experience, but I'll tell you how to calculate that roughly. I'll tell you. In weekly expiry, generally I observed. So let's hold the questions. It's my request. Let me complete this, because if we start getting into questions, we'll have a big Q&A. Let's complete this first. So now check spread, check liquidity. What is spread? So we should understand this stock is good to trade or not good to trade. That too in options. Okay, Reliance I am taking 1600 call. So now can someone tell me quickly what is the spread? How much is the spread? How many paisa is the spread? 20 paisa. So 20 into 500, it's 100 rupees, right? 20 into 500, it's 100 rupees. So you can see here, I have told here, maximum spread can be 300 rupees for an option. Maximum spread can be 300 rupees for an option. Same, let me take to Colpal. So now can someone tell me what is the spread? Let's calculate a big number. 9.8 minus 3.6. 6.2 into 700. So the spread itself is 4,340 rupees. So do you think this is going to work? Can you able to trade in this stock and can you able to make profit? No. So immediately you have to avoid these kind of stocks, trading in options straight away. Next. The spread means the difference between the first buyer and the first seller. The difference between the first buyer and the first seller is called a spread. Okay, can you take Nifty or Bank Nifty? Nifty and Bank Nifty, by default there will be liquidity, sir. No need to worry about that. Okay, no need to worry about that. So can you see good liquidity here? Do you see any gaps in between these options in this chart? For seeing the liquidity, okay, I thought I told you. Okay, it's my mistake. Okay, for seeing the liquidity, open a 5-minute chart. Open a 5-minute chart in Upstocks, Zerodha, whatever it may be. Open the option chart for 5 minutes. Time frame is 5 minutes, and you can see here. Do you see any gaps here? No, right? It's densely traded, right? Can you able to see a chart like this? It's traded like this, right? Yes or no? Case 1 or case 2? This charts. Case 2. So this means there is no doubt it's passed. It's a pass mark. Next, let's see. Let's see for the other stock. So now, is it densely traded? Is it traded like this or it's like this? Case 1 or case 2? Case 1. So this kind of options, even your stock prediction is 99.9%, your stock prediction is perfect, it is not going to work. So liquidity, that is what we are seeing here. So liquidity means the volume, the number of traders in the stock, the number of traders in the option. Tomorrow, from where we get the spread data? First buyer, first seller. Yes sir, first buyer, first seller. You have to see this just before you make your entry. You have to see this. So now do we have difference between this first chart and the second chart? So before buying an option, please go and see, is it going to work or not? Are we clear? Say like for example, Grazim 791. So this is fine. This is fairly traded. I can accept. We can accept this. It is fairly traded. I'll not tell this as a bad liquidity. It's fairly traded. Let's take 790 put. 790, it's not there. Then 800 put. So this is also fairly traded. This is also accepted. Say like for example, if you see here, if you might have bought 800 put at 5 rupees today, in the end of the day it is 17 rupees because the stock is completely crashed today. Full side, it's like one side movement. Okay. So check spread and check liquidity. This is very important. For a future spread, it should be less than 750 rupees. For an option spread, it should be less than 300 rupees. Next, stop loss for options, it should be as per technicals or 25% of the premium. So what is as per technicals? For example, if you are buying an option based on the cash market, when the stop loss triggers in cash market, you have to exit in options. Are we clear? We will not be entering, we will not be doing any kind of research in option chart. Based on the cash market, we will make our entry, and if the stop loss is getting triggered in cash market, we will exit accordingly in options or 25% of the premium, whichever is less. Say for example, if you buy an option at 10 rupees, the maximum stop loss is 7 rupee 50 paisa. Technical stop loss is 8.25. Which will you prefer? Case 1 or 2? We know why case 1. I am telling whichever is less risk, to be very clear. Now tell me, which will you prefer? Always we enter option based on cash market. That is perfectly right. We should not trade based on the chart on option or future. First of all, there will not be any chart to learn. There will not be any chart to analyze, first of all. Are we clear? So premium calculation is based on involving time, instinct value of stock, giving the weightage to time left. What is the formula? Sir, don't confuse that much, sir. Okay, don't confuse that much. Simply you see what is the time to expiry. Time to expiry. I'll come back to that, sir. Vijay sir, I'll come back to that. RSI and moving average will not work in option. Okay, let me show you. Assume that. So what is the chart we are supposed to use for our technicals? What is the chart we are supposed to use for our technicals? What is the time frame? So can you able to daily chart? So candlestick daily. Do you see any formula here? Do you see any moving average, anything here? No, right? So it is not possible. It is not possible to arrive anything with option chart or a future chart. You will not get any data previously. Previous data will not be there. So don't do any kind of research in option and future charts. Always your research should be done only in cash market. Clear? So technicals is applicable only for positional trades. No, ma'am, it's applicable for intraday also. But the chart which we have to see is only on cash market, not on future. So I'll show you the reason. I'll show you the reason. So can you see the data here? Yes, perfectly right. Bible is cash chart for future option. All the analysis has to be done by cash market only. Can you able to see the data here? Can we able to analyze anything with this data? It's a daily chart. You can see Graysim, it's a daily chart. Do you think can we do our analysis with this future chart? Okay, let's take Reliance. What happened? So this is not possible. Okay. So then stop loss. So intraday. So arriving the target. Okay. Option target. For intraday, we can have a target of 25 to 50% of the premium value if we have a good momentum. For option target, so that is the reason I told you, don't take the stock, don't trade in the option if you get the spread is very less. If the spread is bad, don't trade in the stock. That is what I told you first itself. That is the reason I am teaching you this. See what he asked is option stop loss will get bypassed. So for example, this is the stop loss. It will not touch here. It will straight away go here. That is the reason we are ignoring the stock which is having low spread. Okay, high spread. Okay, next coming back, option target, intraday target can be 25 to 15%, 25 to 50%, and if you buy a premium for 10,000 rupees, if you get 2,000 to 2,500 rupees, I'll tell you it's a very good profit. And if you get 1,000 rupees, even I'll tell you it's a good profit. So what is the percentage it's working out for a 10,000 premium, and if you get 1,000 rupees profit, how much? How much percentage on 10,000 on 1,000 rupees profit? 10%. Okay, say like for example, you are trading only with 20,000 rupees and you are buying only one lot premium, that is 10,000 rupees, and you are making 1,000 rupees profit per day into just 10 days we are taking. Other 5 days we are deducting profit and loss. So even that scenario you can able to make 10,000 rupees profit on a capital of 20,000. So please be very clear about profits. Any logic why there will be volume trade difference in cash and options? There is no open interest. That's all. In Concor Motors, in the stocks like Concor Motors, there is no open interest. So there will not be volume. There will not be any movement. There will not be profit. Next, for a positional trade, you can expect a profit of 50 to 100% for a option on the premium value. You can take 5,000, 7,000, even sometimes double the profit you can make. Next, it's very, very important. Whatever we have learned now, called as vanilla or naked or open options. That means it's not covered or hedged by any other instrument. Whatever we have learned, it's called as vanilla or naked or open options. For this, the maximum holding period is 3 days. That means if you buy on Monday morning, before Wednesday evening, you have to close. If you buy on Monday morning, before Wednesday evening, you have to close. Number one. Number two, if you buy on Thursday morning, Still you have to close by Friday EOD or Friday evening. Say like for example, if you buy on Friday morning, still you have to close on Friday evening, Friday afternoon. The reason is 2 days, the weekend is a very bad time to hold the option. Weekend option will depreciate. Are we clear? The maximum holding period is 3 days. For example, if you buy an option at 10 rupees, if it is in 15 rupees and if you are expecting 20 rupees target, that is fair. Third day, say like you are buying on the first day for 10 rupees, third day it is 15 rupees and you are expecting fourth day or fifth day for 20 rupees, that's fine. But you bought at 10, third day it is 8 rupees and stop loss is 7.5. Don't carry forward this option. Who didn't understand this point? In other ways, we can simply tell 3 days or weekend, that is the maximum time to hold the option. 3 days or before Friday evening. If you buy on Monday, you should exit before Wednesday evening. If you buy on Thursday, you should exit before Friday evening. Are we clear? So next is money management. So however you are talented, if you don't follow the money management properly in options, okay, if you just get tempted even 5 minutes or a minute of temptation, you lose your entire capital in options. Instead of buying, say like for example, as per money management, if you are having 20,000 in your account, then you should trade only with one lot of nifty option, that is for 5,000 rupees maximum. Nifty or bank nifty. If you are having, say like for example, to trade in stock option per lot, you require 8 to 12,000 rupees premium. You should have 30,000 rupees in your account as a premium, as a reserve. So if you don't follow this, instead of buying one lot, if you buy 4 lots, the possibilities of losing premium or making high loss will be very, very high. So I'll tell you one more thing as per my previous experience. Okay, as per my previous experience, I was giving option research call for 3 years. Okay, it's not 1 or 2 months or 1 year. I was giving option research call for 3 years and my accuracy was around 70 to 80%. How much? I was giving for 3 years and my accuracy is 70 to 80%, and I used to give one open position at a time. I don't flood with buy this, buy that. I don't do that. I give once the target or stop loss hit, after that only I give next target, next call. Okay. So after that, weekly 3 to 5 calls max. Weekly 3 to 5 calls. Since I was providing calls, weekly it will be 3 to 5 calls max. So do you think there is a probability of making loss in this trades? Check all the 4 points clearly. My accuracy is, so it was very, very good. 70 to 80% is a very good accuracy. And risk reward ratio again 1:3. Risk reward ratio is 1:3 again. Do you think there is a possibility of making loss in this? Answers. Where are you? Others. We are out from advisories, right? So I am out from advisories. As a stock Phoenix, we didn't provide advisories. I was giving advisory. Now we are now SEBI registration. Lot of things are there, sir. It is not possible now again. So everyone is telling no, but still many traders were losing money, losing entire capital. Can someone tell why? Still there was loss. This was the highlight, sir. Perfect. The reason was stop loss, money management. Okay. Cutting the golden duck, assuming or thinking that if a gold if a, you everyone knows the golden duck story, right? If a duck can give one gold egg every day, why can't I open and take everything in a single day? So that is what happens. First day I'll give call, it will be profit. Second day I'll give call, it will be profit. Third day it will give call. Third day I'll give call, it will be profit. Fourth day he will be damn confident. He'll be like full of confident. He'll be in full josh. He'll buy one one lot here. At this place he'll buy 5 lots. At this place he'll buy 5 lots. So this call will hit stop loss. Okay, and again what he'll do is, I have seen 4 calls of him, it has never hit stop loss, so I will not follow stop loss, it will recover in 2 days. First crime is increasing the number of lot size. Second crime is not following the stop loss. Clear? So if you don't follow the options, there are many traders, they used to call and ask, sir, this time only I invested the entire capital, sir. What should I do? You tell me what should I do? Sir, after taking the positions, what can I do? Sir, it's not a stock market, it's not a child's play. After taking positions, we can't go back and tell, sorry, please close my position. I did my mistake. No, that is not going to happen, sir. That is never going to happen. That is never going to happen. If you take the position, before taking positions, you ask 100 questions. You call me, you call Prabhu, you call Abhilash. Abhilash is there for you 24/7. You call, text, telegram, WhatsApp, everything you have, all rights you have to do to us before taking position. After taking positions, we will have open hands. We can't tell anything. So follow money management, especially in options. Don't buy for the entire capital. The probability of losing money is very high. Okay, so concluding, as a conclusion, you can see here, for example, if you are buying an option here, only if it is going up you will make profit. Only if it is going upside you will make profit. Even if it is flat you will make loss. Even if it is going down against you, you will make loss. So the probability of making profit is only 30% unless you follow all the factors. Unless you follow all the factors, you cannot be an expert in option. Next, see, for trading in option, it's very simple, sir. I'll tell you again, it's very simple. Okay, only 3 months of your efforts is required. Just 3 months of your efforts is required. Analyzing skills should be 70 to 80%. Choosing the right stock, option liquidity, spread, market support. So this is where something is out of our hands. Always have stop loss of 25% premium, or we can tell us momentum. So for checking the momentum, what is the option to check momentum is there in the stock or not? Sir, with lot of risk, why people are crazy for option? Sir, 10 rupees will become 50 rupees in no time, sir. 10 rupees will become to 20 rupees in no time. So, Deepak, yes, that's right. It's not 5-minute chart. To check the momentum, we have to check open interest. To check whether there is a momentum in the stock or not, so you have to check open interest. So if you check open interest, you can able to understand the momentum is there or not. Yes, trade setup, open interest, liquidity, spread, these all the checkpoints we have to start checking in options. Okay, so that's it for today. Is there any worst scenario on spread? Sir, I told you no, sir. Spread, why you are getting confused? The spread should not be more than 300 rupees. It's very simple. The spread, if the spread is more than 300 rupees, don't trade in that particular stock. Why do you want to trade in that? Spread is nothing but the buyers and sellers. So buyers and sellers itself is not there. Why do you want to trade there? So premium calculation with stock movement, share rough idea. So premium calculation, premium, I am not sure how to calculate premium and all. So far what I do is I see the premium into the live terminal and we check. So how the premium calculation, in the sense 1:3 on the cash market. For example, if this cash market is trading 100 rupees, the option will trade 30 rupees if it is first strike. So tomorrow I'll have one first session on this and I'll explain you more details, sir. Tomorrow I'll have first session on this and I'll explain you more details. Sankit, you can remind me tomorrow. In weekly expiry, generally I observed in the first 2 days is positive 80% chances and next 2 days will be negative to reduce the premium. Is my opinion correct? Yes, because it's on the expiry side, right? Really education session, don't want to end it up. Okay, clear, sir. We'll continue. It's not going to end, right? So from where we will get spread data? Aditya, it's very simple, sir. In Upstocks terminal, click on this. You get the spread here. There is no future added. Just add your future here. You will get a spread here. You can see here, right? Spread data. Sir, can you please repeat the theory of spread for future also? Sir, it's very simple, sir. The difference between, now tell me what is the difference between 1565 and 1565.3? 30 paisa. So 30 paisa into 500, it's 150 rupees. So this is the difference of the spread. Clear? So tomorrow again it's going to be an important session. Please join in live. So please try to manage your time. So after completing this option chain reading, we will have one full summary on options. Okay. So thank you. Good night.